Hello traders, and welcome to how to swing trade crude oil with the QM futures contract. Before we begin, as a reminder, trading does carry significant risk, and all information in this video is provided for educational purposes only and does not offer or recommendation to trade futures, stocks, options, or forex. All right, let's go and transition to the chart, and we're going to just do some simple market profiling. I'm just going to mark out some levels of interest on a higher time frame here that I really want to go ahead and trade. Now, what I'm going to go ahead and do is find these key lows here, and I'm going to go ahead and go into the properties here and then change the color to red. So I know that they're very important levels that I want to go ahead and watch. You can even do this on a weekly time frame and go out to these higher time frames and see if there's any levels. Let's go ahead and let that load here. And see if there's any levels that really kind of pop out to you, because remember, we're swing trading, so weekly is a time frame we could certainly go ahead and reference. Now out here on a weekly time frame, you can see that we have a key low right through here. We're going to go ahead and keep that highlighted. I'm going to go ahead and take this line and copy and paste it. And I'm just going to go ahead and plot these levels right around price. And copy and paste it again. You can see we have a key high and low through there as well. And you can see that the market's fairly jumbled up right now. We're just kind of in a range. So that's pretty much all the levels I'm going to go ahead and highlight here on a weekly. Coming out to the daily here, once again, another important level I'm going to go ahead and highlight here. It's going to be this low here. And again, you can see that the market, again, is just kind of tied up. So at that point, your market, you kind of marked out some key levels. And you want to go ahead and see if there's anything on a lower time frame, like a 240 minute, that we can go ahead and plot. Now here on a 240 minute time frame, once again, we can go ahead and highlight some levels here. And I'll go ahead and mark this one and go ahead and leave that the same here. So those are some key levels I'm going to go ahead and watch. Now, the next thing that you want to go ahead and do, let's go ahead and go back out to the daily. Start looking for any type of trends here in the market. And as we mentioned, the market is a little bit in a range here, pretty tight range. We do have a trend line here, and you do have a trend line going across the bottom here. All right, you can see that again, the key low there. I wouldn't even mark this one here so much, but I got a nice one there and then a nice one there. Let's go ahead and go down to 240. Go ahead and load out the 300 days. All right, we can go ahead and identify to see if there's any trend lines here that we can see. And you do have a small one underneath the market here, a little bit more steeper. Let's see right through there. So that may be something that we want to go ahead and watch. And you can see that we do have a little bit of support through here, some resistance through here as well. So if we can get back into this area, we'll certainly be looking to go ahead and take a long there. So I want to go ahead and talk about setup here. And most times when you draw these trend lines, what you're going to be trading is the third touch back to these trend lines. So you can see that we had a touch here. We connected this low here and waited quite a while, a lot of space in between this touch and then finally our third touch here. So you can see that we highlighted a couple areas here. We had a nice move down and then a touch there, and then it started to trade off here. And this impulsive nature, really kind of highlighted these two key highs here, which is why you'd go ahead and highlight or go ahead and start drawing a trend line across those, because you want to see if price will come back to that. And so price started to move away here pretty aggressively, as you can see. And then we get to the third touch right over here. Now, you could have drawn a trend line across the top here and then maybe even connected these highs initially, and that would have gave you a trend line that looked something like this. And that's absolutely understandable and would certainly kind of expect a trend line like that, because you came back up here and you did respect it here initially with a nice rejection candle. However, you can see that there was really no follow through here on any of these candles. You can see, if we zoom in here, let's go ahead and actually do that here. All right, if you zoom in on this candle, you have, again, that rejection there, but you had no follow through on the candle. You had a little bit of follow through here, but that's not a candle that really kind of gets you excited and gets you short here in the market. Beautiful rejection but really no follow through. And that follow through is so important when it comes to swing trading, because you need confirmation of a candle like this. All right, candle's certainly there, but you need confirmation that the sellers are still there and still willing to go ahead and push it. Also, a bigger candle would also help as well. And I'll go ahead and contrast that with this signal here. So you can see that we started to move higher, and you have a rejection signal, and you actually had more follow through here on this candle. The reason you have more follow through on this one is that you actually see the close is just below the low of this candle. So if you look at the close here and then compare it to the low here, you can see that it actually closed below the low and the previous bar's low here as well. So it broke two lows and actually closed above it, indicating acceptance of the new price below those lows. Here, however, the low is here, and you didn't have price trade below it and accept until this candle here, which is a few candles later. So very choppy action, then kind of a drop off here. So really not a compelling reason to go ahead and take a short. However, when you do have this trend line that we drew from over here, we come back into this area, and we can certainly see momentum starting to drop off here. You see big bars, little bar in rejection, smaller bars here, a little bit more rejection, a little more rejection. All right, kind of a hanging man type candle there, and then bam. So you can see momentum falling off, and then look at that follow through candle there. That's exactly what you want to see, is momentum coming out, and then sellers taking control of this market with a strong command here for sure, and you definitely have that here. So a lot of reasons to go ahead and execute on a trade like this. Typically, again, you'll see this on the third touch. It'll be very difficult to try, when you see, maybe you draw the trend line from here, and then you see this point, you draw it here, and then try to catch, this point right here. Let's go ahead and back that out there. This point right here, that'd be great if you could actually catch this one, but you want to see price actually move away to kind of confirm this touch here. So that'd be certainly kind of an aggressive tactic to go ahead and trade that. However, this one would be a good trade. You can go ahead and take that short there. You would go ahead and get short there at the close of the candle, stop beyond the highs. Now, I'd go ahead and put it quite a few ticks above the high, not just right on top of the high, like right here. Go ahead and give it a little bit of room. I put it right above this 61 figure there. And you can see also that we have a convergence of this daily level here. See this low here, you have a low there, right? Kind of retested this low there, and you're coming right back, and you have a convergence, a confluence of the falling trend line plus the horizontal level here as well. So you have two things really coming together here to go ahead and confirm this trade. So this risk reward calculator is set to 2 to 1 here on this trade. All right, and I like how this target is actually these most recent highs here that it actually moved away from. So this is a perfect trade. Total risk on this trade is going to be 44 ticks. Gotta make sure that's 44 ticks on this trade. So that's pretty good. Now let's go ahead. Oh, sorry about that. Let's go ahead and put that risk reward calculator back. All right. Let's go ahead and move forward here. You can see that we retested the high here, gave a beautiful rejection candle, and then even a better follow through. Now, if you could have, let's go ahead and back out here a little bit. If you could have this candle right through here, let's go ahead and zoom in again. If you can have a candle like this, rejection candle with a follow through candle like that every time off of a horizontal support or resistance, and a falling trend line, this right here is the exact setup, the textbook setup that you want to see, the rejection and then follow through here. If you had this here, I'd be even more bearish here. But nonetheless, you did have a confirmation, a double top there, confirmation to the downside. Let's go ahead and back out here. Let's go ahead and move forward. Let's go ahead and zoom in here and go bar by bar. See, we're trading up here, and then bam, target hit. All right, so again, we're risking 44 here on this trade and should have gotten about 88, about 91 here, 88 ticks here on the trade. That's a beautiful trade. Now, this one here, if you were to take this trade from here and exit here, you'd be in this for about 5 days for this trade. Now, if you want to be a little bit more aggressive and then really swing this into a new low, you can go ahead and, again, I would go ahead and just conservatively go ahead and target these previous highs if I just want a quick in and out. if I really want to identify another area that this market can go ahead and go, your first trouble area is going to be right here, these lows. You're going to have to break these lows here, so this entire zone is going to give you trouble. But I would go ahead and start marking this area here, because you had a area of price acceptance all through here. It's an area of price acceptance here, where price went down here, found acceptance here, bounced around here for a while before it blasted right out. So this would be the highs here. This level is where I'd look to go ahead and target for a swing trade. But remember, you are going to have a little bit of a problem area right through there. Let's go ahead and see how this trade actually progressed. All right, so we can see that just a couple ticks off the that acceptance area there. Let's see, do we get it? Yeah, we finally went in there. All right, it took a little while to go ahead and get in there, but if this is your target here, you know, the target that previous acceptance area, again right through there. Go back. You are looking at 240 ticks off of 44 ticks risk. So risk reward on that one's pretty favorable, pretty minuscule compared to the risk. You had to have kind of a bit of a steel stomach to kind of stomach the see that you're in profit here, giving some profit back, and before it finally started to crash down here. Looks like it's basing out. But you can see as soon as we got into this trouble area here, market kind of stalled out and needed another influx of sellers to come in here, and it certainly did. And we finally broke through and then nailed that area. You can see it was certainly a key area to go ahead and test. You can see it kind of rejected off there a couple of times. So that's kind of that's a setup that we want to typically look for there. That's pretty much textbook of what we want to look for.